Oil prices jump as war in the Middle East escalates, with Iran firing missiles into Israel. Japan's new Prime Minister pledges to address low spending and slow growth. And we look at China's economy as the government raises the retirement age. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. As tensions between Israel and Iran escalate, the global oil market is facing potential price hikes and significant supply disruptions. This marks a major shift in energy market dynamics, driving uncertainty in oil prices and global trade. Up to 4% of the global oil supply is now at risk due to the escalating conflict. Oil prices rose by 1% after Iran launched missile strikes on Israel in retaliation to the killing of Hezbollah leader Hasan Nasrallah. Analysts warn that disruptions could push prices back to $100 per barrel, significantly affecting global markets. Iran, the third largest OPEC oil producer, produces almost 4 million barrels per day. Israel's retaliation and the possibility of further military action against Iranian oil infrastructure increase the risk of supply disruptions. The conflict is driving oil market volatility, with Brent crude currently trading 1.4% higher at $74.62 a barrel. Market observers have moved from geopolitical risk fatigue to seeing a real threat of oil shortages. US production increases and sputtering Chinese demand are also affecting oil prices, but Middle East tensions are now a key factor. For more, let's bring in Naeem Aslam. He's Chief Investment Officer at Zay Capital Markets. Good to see you, Naeem. Now, up until now, there hadn't been much of a significant impact on oil prices, but how could further escalations between Israel and Iran disrupt global supplies?
Thank you for having me. I think you have summarized everything very neatly and quite acutely, exactly how traders are very much behaving. Because on a day like today, which is the US ADP number, and that is supposed to be driving the price action, the focus is on geopolitical tensions. And these retaliatory actions and attacks on Israel, they were coming for a long period of time. But traders were very much prepared. Now, looking strictly from the price perspective, given the fact that now, the attack has happened, but we are waiting for the counter attack, and then this is a sort of an episode which we have already seen previously, the current price action doesn't really indicate a major disruption to oil structure in Iran. However, if you look at various different Twitter feeds, which are, for example, Mossad's commentary and on Twitter, they are very much putting videos of Iranian nuclear plants, the electric nuclear plants, and of course the various different oil fields with oil production fields. So that can potentially happen, but the price action is still telling us one story, and that story is that the conflict is still going to be very much contained. I think another perspective from traders, from trading, and that traders needs to pay close attention to is what if scenarios. And those what if scenarios are if Iranian allies begin to support in this particular war, and the war does become a wider conflict. Under those circumstances, we're looking at Russia, we're looking at Qatar, and then we are looking at a much higher probabilities in terms of oil disruption, in terms of energy disruption. And under the same what if scenarios, you are looking at central banks going to come very much in the focus. Because remember, central banks have only been able to reduce interest rate because of stable energy prices. But if these energy prices begins to move to the upside, then again we are going to look at a very different cycle in terms of interest rate. We're going to see very different risk appetite among investors as well. But currently, looking at the prices where we sit, we still think the probabilities of a much wider conflict or the escalation of oil disruption are still somewhat contained.
And with Brent crude and WTI prices rising, how are global markets preparing for potential shortages?
Well, I think for a scenario like this, it's difficult to be prepared because especially when you are the third largest producer of oil, as you've correctly mentioned at the beginning of the particular segment, because 4 million is not a walk in a park that it can easily be done. Of course, Saudi Arabia is a major player, and then they can turn on the taps in terms of providing the extra liquidity because we there was a extended period when Iran wasn't allowed to produce oil as a part of OPEC, but when they were allowed, then they are producing as a third biggest, largest partner or a producer of oil within OPEC. So, from traders' perspective, they have seen this particular episode when Iran is not part of OPEC, when it's not producing the quantity, or they've also seen the scenarios where Iran has been producing much or was producing much at a much bigger scale. So I think because of these particular factors, we are not seeing significant movement in terms of our oil prices. And again, I wanted to go back to my initial comments that I've made, and that is central banks. Central banks are very critical. So is the West really going to allow Israel to attack Iranian oil fields? I think that is a question which we will see the main focus in the coming days.
That's right. That is the big question going forward. Naeem Aslam, Chief Investment Officer at Zay Capital Markets. Thank you very much as always.
Thank you for having me.
Now a quick look at some of the other top business stories from around the world. S&P Global has downgraded Israel's long-term rating from A+ to A, citing economic risks stemming from its escalating conflict with Iran-backed forces. This follows an earlier downgrade in April. Last week, Moody's cut Israel's credit rating by 2 notches, warning of a possible drop to junk status if tensions escalate further. The Bank of Korea has announced that the foundation for price stability is strengthening as inflation cooled more than expected in September. The consumer price index rose by just 1.6% year-on-year, down from 2% in August. This marks the first time since early 2021 that it fell below the central bank's target, indicating a promising shift in the economic landscape. Shares in sportswear giant Nike fell 6% after it announced sales had significantly dropped in the first quarter. Revenues fell 10% to $11.65 billion as sales in China, the US and Europe saw significant drops. CEO Elliott Hill faces the tough task of reviving growth and regaining market share. And Pink Floyd has sold the rights to their recorded music to Sony for $400 million. The deal includes famous hits like Wish You Were Here and Money. Sony will also gain rights to use the band's name and likeness for merchandise and media projects. However, Pink Floyd is keeping the rights to their songwriting. The sale comes during a boom in the market for vintage rock music catalogues. For years, people in China retired at a relatively early age, but that's set to change after policymakers announced recently that it will gradually raise the statutory age for quitting work. The move is aimed at easing pressure on the country's pension budget, but experts say it may have limited impact. Roland de Bruin reports.
At age 57, Jiu Zi from Beijing likes to keep active in her retired life. A former shopkeeper, she visits the city's many public parks every day to enjoy her favorite pastime and still picks up new things.
I've been dancing for many years, but I've been doing Uyghur dances now for just over a year. This is traditional folk dancing. In my life, what I love to do most is dancing. Every day I listen to music and I like to dress up and come and dance. When I come and dance, I make friends. It makes me happy and enriches my life.
When she's not there, Jiu Zi spends the rest of her time looking after her grandchildren and doing housework. She says she feels fortunate to lead the life she has. Up until now, people in China have enjoyed ending their working lives early on, 60 for men and 50 for most women. The system's been that way since the 1950s, when life expectancy and education levels were much lower. But that's all changing. The government recently announced it would raise the retirement age gradually over a 15-year period to 63 for men and 55 for most women, and delay access to pension benefits. The measure takes effect in January. Lucky for Ju, there won't be any impact on her.
I've not really thought about it, but we need to listen to the national government, right?
Experts say reform has been a long time coming. China is grappling with one of the fastest aging populations in the world.
It's estimated that in 2035, more than 400 million people in China will be over the age of 60. That's more than the entire population of the US. Demographers in China also predict that's the same year the public pension fund will run out of money if something doesn't change.
Still, critics say policymakers should have addressed the issue much earlier. The problem's now exacerbating by a slowing economy and fears over China's outlook. Many people have taken to social media to voice their discontent. Among them, young people who are struggling to find jobs.
Young people who are, hoping to enter the workforce often need to have a certain amount of turnover in the workforce in order to create opportunities for them. And if you delay people's retirement, it is going to hurt the opportunity for younger people.
And raising retirement age won't address the demographic problem China faces. Some experts say the move now comes too late, and that without a bigger shakeup, there will still be serious strain on the economy in the years ahead. Roland de Bruyne, THA World, Beijing.
Let's discuss this further with Lok Sang-ho in Hong Kong. He's an adjunct research professor at Lingnan University. Firstly, why is China raising the retirement age when all we're hearing at the moment is that AI will be taking over jobs and it can actually do the work better?
Yes, you see, you have to understand that the skill levels of different cohorts of people are different. The people who are about to retire, a lot of them are very skilled and at a level that can actually be complementary to employment for younger age people. You see, so if they retire, and if people with similar skills cannot replace them appropriately, then actually there would be more difficulty to enlist those other people who could otherwise work in a team. So actually the skill levels of these experienced workers, they are needed in the labor force in order to keep the employment.
Right, and how will raising the retirement age impact China's workforce?
Yeah, that's exactly what I'm saying. I think, first of all, China's labor force has been declining, but of course, because of automation and because of the outsourcing of a lot of labor-intensive tasks, that is not really a big problem for China. But China has got a lot of supposedly very skilled people who graduate from universities, because the university enrollment has enlarged so rapidly. And so a lot of people with bachelor and higher degrees, they come onto the market and they're looking for high-level jobs. But unfortunately, the high-level jobs are always scarce, and we need not only people with high qualification, but also people with experience. And that is exactly why we need those experienced people who are about to retire actually to stay on, so as to keep the production go along, you see. And another problem that China is facing, of course, is the low fertility rate, so that the dependency ratio for the elderly has been rising, because people live longer, and yet the people going in the workforce is becoming smaller. And I had looked at the figures, and I realized that indeed China's women's fertility rate is now about 1.7, which is well below 2.1, which is what is necessary to replace the population, to keep the population at a steady level. But Uh, Actually, in the past 20 years, China's fertility rate has been steadily increasing. So I would say that the policy that has been introduced by China, like from one-child policy to two children, and now 3 children. You see, so that is working to some extent, but it's not yet sufficient, to keep the um, uh, population in equilibrium. But I think as long as this tendency for the fertility rate to rise, I think some kind of equilibrium will be reached within the next few decades, so that China's equilibrium population over the long term will be maybe 2-3 billion less than what they are today, but China should be able to keep it there.
Okay, Professor Lok Sang-ho, we'll have to leave it there. Thank you very much for joining us.
Okay.
Back to the Middle East, and the scale of Israel's ground assault on Lebanon, alongside its crippling air campaign, is sending waves of panic through the capital. Priyanka Navani reports from Beirut.
The Israeli army released these videos of its soldiers preparing for a ground raid into Lebanon. A short while later, they say they went in what would be Israel's fourth invasion of the sovereign state of Lebanon, its last incursion being in 2006. It's a claim Hezbollah disputes, but one that was enough to instill more fear in an already panicked population. But there are few options available to the mounting number trying to leave.
There is no flight available, So before, let's say right now, like we are the 1st of October, before 15th of October, there is no available flight out of Beirut.
At the Syrian border, thousands are fleeing every day. The trip takes time and is growingly risky due to recent airstrikes. Taxis from Beirut can cost more than $500 for a family of 4. Some travel companies are even offering buses through Syria to Jordan. The journey is long, but the demand is high.
From the first day, I got more than 100 calls. And the first day, we booked more than 50 people. They need to travel. And daily, we are getting more and more and more and more.
But for many in Lebanon, the economic crisis means leaving isn't an option. At grocery stores, there are signs of people stocking up on essentials.
Very big numbers in purchases, such as instant noodles, such as Indomie especially. Bread, for example, the days where they had the airstrikes at Dahieh, the bread was like gone in minutes. People are getting a lot of canned food more.
But even stocking up is a luxury to some, particularly the thousands living on the street in the face of what Lebanon's prime minister has said could be the largest displacement crisis in the country's history, with 1 million people living in limbo, including the family of 5 now living in their van after having been displaced from the southern suburbs on Friday.
I have no battery in my phone and I can't shower. I just wash with water from the sea. It's been 3 days that we're living in the van. Good people are distributing food for us.
The scale of need here in Lebanon ranges. Some people are desperate for a ticket out, others only for a can of tuna. The common thread is that everybody believes that this war is going to take time and know that the only way through it is going to be together. Priyanka Navani, TRT World in Beirut.
Japan has a new Prime Minister, Shigeru Ishiba. After being formally voted in by Japan's parliament, his ascension comes after becoming the head of the leading Liberal Democratic Party last week. He's promised to work on the economy's multiple challenges, including low consumer spending and growth. Emre Boz reports.
Shigeru Ishiba is hereby nominated as Prime Minister of Japan.
And shortly after, a round of applause. As new president, one of Ishiba's main goals is to prop up consumer spending in the country. Household spending in Japan has largely been in the negative since the beginning of the year. One way he'll try to achieve this is by advocating a raise to the minimum wage. He believes this will boost consumption by giving more people income to spend and improve economic growth. But analysts say this may make inflation even worse. The rate of price rises in the country has continued to climb since the start of the year, reaching 3% in August. Ishiba says he plans to raise taxes on corporations. This is to fund defense spending and ensure the government pays off its growing debt levels, climbing to more than 250% of GDP. Critics point to higher corporate taxes as potentially reducing investment in the country. It's because they make returns from investments much lower, deterring investors and slowing down economic growth. Ishiba's focus is on improving domestic demand and removing debt. By removing debt, he believes the government will have more for public spending and investment. And Ishiba's primary goal is to make sure the country doesn't go back to its 25-year-long deflation period, where spending remained low and investor sentiment pessimistic.
We will pursue fiscal policy that puts highest priority on ending deflation. As the first step, we will compile a package of measures to ease pain on households from rising prices.
Moving forward, Ishiba has also called for early elections in October, pledging more economic growth and expansion. So it's a game of wait and see to find out whether his policies are approved by the people of Japan. Emre Boz, TRT World.
For more, we're joined by Kotaro Tamura in Singapore. He's an adjunct professor at Lee Yuan Kyu School of Public Policy at the National University of Singapore. Thank you very much for being with us. Now, what are President Ishiba's main economic goals?
So we are from the same hometown. We share the constituency. And I was at the same time upper house member when he is lower house member. So I think I come to know him to some extent. So this is a very special moment. He's in the very challenging, one of the most challenging election cycle as a prime minister in the history of Japanese politics. So don't take what he says yesterday as an economic policy. What he says is more like a campaign pledge. He needs to win the election. He's calling right away. So he is saying everything great. You know, price hike is okay. Your wage will be okay, going up, and the stock price will be fine. So he says he's very flexible to achieve political goal. He's very experienced politician. He's very flexible. He changed his political goals in order to win the election. So after this, after he won, he has I don't know, it's a 50-50 chance to win the general election coming soon. But after when he was very lucky to win the incoming election, he has another election, national election, in next summer. So until that moment, he'll do whatever it takes to look nice to the public, to be able to win the campaign to national elections. So don't take it very seriously. So he's now saying very great things. And after winning next summer upper house election, he's coming into the golden cycle of election, 3-year no election. So at that moment, he will think more seriously about economic policy for the country.
Right, and Ishiba's plan to raise the minimum wage aims to stimulate growth, but some analysts worry about inflation. How do you think he'll balance these conflicting forces?
So I think, he will follow the former Prime Minister Kishida's economic policy. And Kishida was pushing Japanese business circle to raise the wages. It was good. And Japanese companies are making a record amount of profit thanks to the weak yen.
Okay, Professor Kotaro Tamura, I'm afraid we're out of time. We'll have to leave it for now, but we'll discuss this at a later point with you. Thank you very much for joining us.
Thank you.
Well, that's all your business news for now. Thanks for watching.